Good day everybody, it's your guy here, the unknown, and today I want us to look at something important. As I always say, if you come to your charts and you don't know exactly what you're looking for, you are simply gambling. Okay, you need to know what you're looking for at what time, what is going to determine your entry, where you're going to put your stops, and where you're going to put your take profits. And you don't just decide to target 100 or 200 pips. You need to know how to have proper targets. In other words, or in simpler terms, you need a setup that is rinse and repeatable. You need a setup that repeats over and over and over again, a setup that you can learn and master and execute it each time it's presented. So you need something that's repeatable, and that's what we do with this strategy. Okay, later on I will explain this trade that I took on Friday. Okay, I initially targeted 200 pip, but I had to close it because I was going out, and at the end of the day it did go to 200 pips, but I took roughly 80 something on Friday. So there's a lot I'm gonna share with you on this video. Just take your pen and paper and pay close attention to this. Okay, so guys, before I even go to explaining the trade or the beautiful trades that actually happened, I want us to start here. As I said, if you don't know what you are looking for, you are simply gambling, right? So you need to know exactly what you are looking for at what time. Okay, so for that we have criteria for this strategy, which is the most explosive trading strategy for indices. The strategy name is self-explanatory because we are waiting for moves that are ready to explode. We don't want to trade moves that are not going anywhere. We want moves that are exploding at the time we take our executions. This is highly important because you don't want to be sitting on your charts the whole day. So the first criteria, as you can see, I will mark it in green. Why? Because some days you won't be able to identify this, but it's important. Whenever it shows up, you need to know because it's important. Okay, you identify trap volume before the session, because sometimes they will trap throughout the Asian and the London session and then lead you back into trap volume so that you get trapped and they actually punish you. So you need to know it's trapped. Okay, and I'll explain this. I've already explained this, okay, many times. So sometimes you won't be able to identify this one. It's okay, you can still proceed. However, these ones are very important. We do not go to the next one unless the one above is met. Okay, that is to say, this is a prerequisite for this one and this one is a prerequisite for this one. So you can never come to the trade part unless this one has been met, and you cannot come to this one unless this one is met. This is highly important. Okay, so the second criteria is to wait for the New York session to open. Okay, we are coming 10 to 5 minutes before the session opens, and it's very important to wait for the session to open. Why? Because we do not execute this strategy unless the session is open. Some days you're gonna have news during the session. So if we have news during the session, we wait for the news to trade. Okay, why? Because most news are gathered from surveys, and you can't predict the value of surveys. Okay, for example, non-farm is collected from companies where they record information from the payroll, and it's actually gathered in two ways. They also ask household, okay, through surveys. So those are surveys. You can't predict how non-farm is gonna come. Okay, yes, you might have ADP, but you can't predict non-farm based on ADP. They are correlated, but you can't predict results from surveys. So we wait for the news because you might be in a winning position and they can just weak against you and close you. Okay, and now this is the third criteria, which is also important. Remember, we don't just want to enter when we don't know what's happening. So we want to wait for insiders to do their job, which is to trap. We know that it's insiders versus retail guys. So insiders, if they are buying, they want retail guys to sell. Okay, if they are selling, they want retail guys to sell. They always want retail guys to take the opposite direction from theirs. And we already know that roughly 95% of retail guys are losing on the markets. Okay, so we know that the insiders are correct most of the time, hence we want to go in line with them. Okay, so I told you 90% of my executions are based on triangles. Okay, 90% of my executions are based on triangles. However, there are other patterns beside triangles which I have shared on my playbook. Like we have head and shoulders. I've given you all the patterns you need on the playbook. I've just summarized the entire strategy in a form of a PDF format. Everything you need to know. I put different kinds of trends because sometimes it's very important not to counter trend a strong trend. I've put the entire strategy in this playbook, and every time I update it, everybody who has it will get it. Okay, for now it's in the link in the description. So there's a lot of pattern I put here. As you can see, these are head and shoulders, and they appear in many ways, but we're gonna come here in a minute. So let's proceed. Okay, I told you 95% of my executions are based on triangles, so we need to see a pattern, and once a pattern is met, we go to the next step. Okay, we want to see an evidence candle. What is an evidence candle? An evidence candle is the big candle that breaks out of the pattern, mostly the biggest candle from the last touch down. If it breaks out at the top, say for instance, if we get a breakout to the top like this, then this candle must be bigger than the candles here that were made after touching down here. Okay, this is the last touch before the breakout. How are you gonna know? You will know when they break out that this was the last touch before the breakout. Okay, if they keep coming and playing, then this is not the last touch. It only becomes the last touch when they break out. Okay, so the evidence candle is the biggest candle that breaks out of the pattern. Okay, not only that, here's another crucial thing, hence I will underline it with red. It must happen at the correct time, and when I say at the correct time, that is to say we need evidence candle that happen as close as possible to, this is just the watch, okay, as close as possible to the hour mark or to the half hour mark. This is just half past, this is o'clock. We need evidence candle. We need this candle that happens as close as possible to this two times, the o'clock or half past. That is to say, I'm only willing to take a trade if the evidence candle happens from 55 to 10 past, okay, or if it happens from 20 past to 22. However, I like it most when they happen from 55 to 5 past, because now this is as close as possible to the o'clock. Or if they happen from 25 past to 25 to, okay, why? Because these are the golden times for me. They are super close to this time here, but most of the time again they might happen exactly at these times, of which that is like wow, that is wow. Okay, that is wow. So if the evidence candle happens somewhere here, you can ignore it, okay, for now, up until you have mastered the super perfect patterns and evidence candle. Okay, for now focus on the one that happened from 20 past to 22, or from 10 to 10 past. Okay, but mostly the ones that happen from 55 to 52. And the reason I'm willing to take from here to here or from here to here is because if they give you a pattern like this, this will be in most cases the only evidence candle you get. Okay, so I am gonna take it if it happens at 21, 22, 23. Okay, within these times over here. This is just a watch, not rocket science. Okay, so if it happens at the right time, you execute. Okay, and when you execute, your stops minimum 15, maximum 25, but I prefer putting 25. Why? Because 25 pip stops simply means your stops are safe. I know there are people who need 5 points or 10-point stops so that they can squeeze their stops as possible and take a bigger lot. Guys, that doesn't work. It's about your stop being at a safe place. It's not about stops being close or tight. No, it's about stops being at a safe place. Okay, that's the most important thing. Stops being at the most safest place. Okay, please do not forget this. It's highly important. The stops must be at the correct place. Okay, so we are done here. However, we are gonna go back to the charts now, but we will be using this checkbox here. Okay, this checkbox here. Okay, let me just delete what we have, as we will be filling all these things together. Okay, we will be filling all these things together. Okay, so let me just delete it for now so that we get to know what happens. Okay, because if we do it together, it's gonna help you. Okay, so everybody who sent me an email, I will actually send you this. I've been sending it to others, so if you need it, here's the email. Okay, just write this email down and send me an email requesting the tick box. I'll send it to you through email. Okay, so now we're gonna go to the charts and we will be examining the trade based on this criteria and this tick box. Okay, so that we make sure we take the best execution. Okay, Okay guys, so yes, okay, here's the thing now. Here's the thing. This is how I look at my charts. Okay, this is how I actually look at my charts on a daily basis. Okay, I look at my charts like this, and I try to find the one that is giving me the easiest trade. Okay, so this was yesterday. Yes, yesterday was a holiday, but it presented good opportunities, and we always speak about these opportunities. Okay, so the first step is to do what? We'll just be looking at it from here. The first step is to identify trap volume before the session. Okay, so we're gonna go to the charts to see where we have trap volume. Okay, and when I talk about trap volume, I'm talking about who is at a loss when the session is opening. Okay, as you can see down here, they send people down. Yes, they send people down, and they try to send people down here. Okay, so at this point here, this is where the session is actually opening. Okay, we are coming 10 to 5 minutes before the session. So when we are here, who is losing? Who was sent into the wrong direction? In this case here, yes, people were sent down, and everybody with below the closing price is trapped. Okay, but it's not really good trapping. Why? Because this only happened, didn't really happen that much, because it was during the Asian session, and most people are not active during the Asian session. However, everybody who went down trying to get a quick buy got trapped. Okay, so these people down got trapped. Okay, but it's not really good trapping. Okay, and for the Dow, when we look at the Dow, okay, the Dow, when we are coming 10 to 5 minutes, we are here, so we can't tell if these guys down here are trapped or if these guys up here are trapped. So every time a session opens in the middle, we do not know who is actually trapped. Okay, so we proceed without it. Hence I told you, it's the only criteria you can continue without. So when we come to Nasdaq, they send people down, and again they send people down. So everybody who fell for the move and went below the closing price is literally trapped on the Nasdaq. Okay, is literally trapped on the NAS. Okay, it's trapped on the NAS. Okay, good. So now we know who is trapped, and the reason we do this is because if they are giving you an opportunity to the downside, you need to know that they spend almost the entire day trapping these guys. In other words, if the insiders are planning to buy, they've already gathered all the orders from those who are selling, so they are holding a pile of money here. Okay, so they might lead you down and not release these guys. Okay, just enough to propel other people to sell so that they can buy more. Okay, so you need to know if they're giving you a sell opportunity and you're targeting a target below the trap volume, then you just need to know that sometimes they will not release these guys and you might end up being trapped as well. Okay, so guys, let's look at this now. The next criteria is what? Yesterday it was a holiday in the US, so yeah, it's not really a good day to trade, but they did give great opportunities. So prices are not always going to do what you want them to do, or they're not always going to do one thing. Hence there is no 100% win rate strategy. Okay, because prices do not do what people want them to do. Yes, of course, many people know it's a holiday and they are not active on the charts. Okay, but that doesn't mean they are not gonna move. Most of the time they won't move. Okay, but sometimes they'll find opportunities to move when there is less volume on the market, because again it costs them less to move prices. Okay, so guys, look at this, now the session is opened. Now we're gonna be focusing on the criteria here, and the first one we were unable to actually see it. It's okay, we can continue. Now there is no news. Okay, but we wait for the session to open, and we only come 10 to 5 minutes before the New York session. We only trade the New York session, so you have the entire day to yourself. Okay, that's why I love this strategy. So look at this, guys, look at this. We are going to the next one where we want to see a chart pattern, right? And we are looking at these things at the same time. Remember, I'm doing this so that I don't get married to a certain index. Okay, I don't get married to a certain index or to a certain asset. Okay, so we can start by looking at which one. Let's look at the Nasdaq. The session was open. We want to see a chart pattern. How do you identify a chart pattern? It's so easy. You find points where they are hitting repeatedly. Okay, already I told you, I gave you a lot of chart patterns on the playbook. Okay, look at this. They come touch this line, they go, they come bounce on it again before going up again. You see, we have blue candles here, so they came and bounced on this price level here, or on this line, the red line that I've just drawn. they bounced on it twice. So whenever they start bouncing on a line many times, that's where you should just note that line and try to see what's happening. So on Nasdaq, remember, it's always important to write these things as they are playing out. Already you know the patterns, okay, you already know the patterns, head and shoulders. Even if you do a simple Google search, you'll get to see a lot of patterns, okay. You'll have to see a lot of patterns. So this is it, okay. However, 90% of my trades are based on triangles. It could be right angle triangle or inverted triangle or symmetrical triangle, but it's mostly based on triangles. So on the Nasdaq, we have what? We have a head and shoulder, okay. Here Nasdaq will mostly do the same thing as S&P because they are correlated, right? But correlations don't last, sometimes they change. Okay, when we look here at the same time, yes, they gave us the same thing. They gave us a head and shoulder. I want to show you something, okay. This is the information you have as prices are moving. You can't say you don't have this information, okay. This is information you all have, guys. Each one of you has this information on their charts. You see, they bounce. Let me just zoom this a little bit so that you can see they bounce on this line, they come and bounce on it, they come and bounce on it. So it's an important line to note, okay. So we have a head and shoulder, okay. At first we have a head and shoulder. Remember, you just have to note any possible pattern that's currently building out, okay. Shoulder, head, and a shoulder. But this one failed. Why? Because it did not break out with a huge candle. Okay, let's say it's there, it hasn't broken, it's fine, let's leave it. We have a pattern on the S&P, we have a pattern on the NAS, and now let's come to the Dow. Okay, I told you, if they touch it, you can just draw a line or see where they are touching repeatedly. So yes, of course, sometimes your patterns won't be as perfect as you want them to be, but that's why in the description below I gave you backtesting tools. You can just go download any of that backtesting tool and start backtesting. The more you backtest, the more you're gonna understand these things. Yes, this strategy is easy for everyone, but it needs a lot of backtesting. Okay, so it's fine. On the Dow we have a triangle, and now we're gonna go to fill in that. Okay, we're gonna fill in this thing over here. Okay, so let's identify. We have I will start with S&P. We have S. Okay, sorry guys, we have S. I'll just write S&P, okay, and then we have NAS, okay, and then we have sorry, we have the Dow, right? Yes, we have these things. Okay, so now we're just gonna fill in here. Okay, what pattern do we have? On the S&P we have head and shoulder, right? Head and shoulder. Oh, sorry, the end is not ending. We have head and shoulder, right? Yes. And then what do we have? We have another head and shoulder, right? Yeah, this time the end must. And then on the Dow, what do we have? We have a triangle, right? Okay, these are the patterns we have. Okay, are the patterns perfect? For me, for a pattern to be perfect, as you already know if you watch my recent videos, if you are new, please hit the subscription button so that you don't miss, because this content will help you. Okay, so guys, for me, for a pattern to be perfect, it needs to have at least minimum 3 touches up and 3 touches down. Even if the third touch is a breakout, it's okay, as long as the other extreme has 3 touches. Okay, so that's what we're gonna look for on the charts. Okay, that's what we're gonna look for on the charts. Let's go back to the charts. Okay, now we are back on the charts, right? So we'll start with the triangle. Do we have 3 touches? I'll just use this kind of box here to try to identify. Okay, yes, to try to identify if we have 3 touches up or 3 touches down. This is a touch over here, okay, because it came all the way up. Okay, and then we have a touch down here, 1 1 1 1. We have a touch up here, 2, and then we have a touch down here 2. So we wait for them to go to the other extreme, and as you can see here, they touch with a pin and the body. I like where they touch with bodies, okay, because if you saw this as a evidence candle, it is not, because you can see we still have this candle. We need something like this or something bigger than this, okay. So now we have 3 up and then we have 3 down, okay. So for the Dow, yes, the pattern is perfect, okay. For S&P, okay, we are just following these patterns, okay, using the checkbox. We'll see which one fails and which one doesn't fail, okay. So here we have Head and Shoulders. By nature, they send people into the wrong direction 3 times, because they say go up, they come down, go up, they come down, go up, they come down again, okay. So what they did is they sent people up 3 times. You know what book says: buy, sell, a pullback, buy, sell, a pullback. So this is a pullback to people. They send people up, they bring them down, people buy, okay, people buy. So they literally send people up, they send people up, they send people up. 1, 2, 3. If you follow or if you followed Steve Mauro, you'll know the importance of the number 3. It's a strong psychological number that insiders use against people, because if people see things 3 times, they tend to believe it, okay. Hence why we need 3 touches on either extreme. But with triangle, we don't even know which side they're gonna break in. Why? Because that's the nature of triangles. Hence why we have to wait and be patient. So always wait for the pattern. If you don't have a pattern, obviously you don't have an edge. You don't know what's happening in the market, so you do nothing. So let's go back to our tick box and try to feel it. Is the pattern perfect? Yes. Head and Shoulders by themselves, they say go up, go up, go up. So this is 1, this is 2, and this is 3. So by nature, they send people in the wrong direction 3 times. So for a triangle, since you don't know, because triangle trap in either side, believe me, a lot of people blow accounts in triangles, okay. So there's a lot of activities happening in triangle. Hence why, if you don't see anything, don't take it, okay, for the strategy at least, okay. So is the pattern perfect? I will say yes for all of them, because they've sent people in three directions, okay. So now let's go back. We have to check the pattern time. Before we go there, I want to show you something. Let's go back to the charts just 1 minute, okay. You see this line is sloped upward, this line is sloped upward. Somebody can say, but this is not a head and shoulder. For head and shoulder, it was supposed to be here. No, this is a head and shoulder, okay. It's we have an ascending and a descending. This is an ascending head and shoulder. Hence, I'm saying I've given you all the different variation of patterns in your playbook, okay, which is in the description. You see, we have descending head and shoulders, okay, and we have ascending head and shoulders. You see, this is the exact one we got, where the hypotenuse line is sloped to the upside, okay. So we have 6 variations of head and shoulder. We have head and shoulders that have double heads, okay. So those are head and shoulders you need to know. We have head and shoulders that have double heads. I know these ones are, like, most people don't know them, okay. There are many patterns that I showed you here that you really need, okay. So look at this, guys. We are going back. You see, the one we got is this one, okay. So yes, it is a head and shoulder. So please, people, don't tell me it's not a head and shoulder. It is a head and shoulder. So now we are going to the next criteria. Okay. Yes, they are perfect. Pattern time. The pattern time helps you with the target. I told you, if the pattern takes above 1 hour to build, you can target 100 bips. However, market condition can also tell you how much to target, because sometimes you will be able to target 200, 300, 500 bips, okay. You just need to use like market conditions. There are a variety of methods we use to examine our targets. Remember what I said in the beginning: if you don't know what you're looking for, you are gambling. You need to know where your stops will be, you need to know where your target will be, okay. So that is information you have. If the pattern takes over an hour, we target 100. If it takes less than an hour, we target 50. However, there are still other methods we're gonna employ to determine the target, okay. So I'm gonna share that with you, okay. So let's look at the pattern time. How long did it take for this triangle to actually build out? This took roughly 54 minutes, okay. That's less than an hour. And for For head and shoulders, this is for head and shoulders, mostly they are not going to be that big, okay? It's an exemption for head and shoulders, okay? It's an exemption for head and shoulders, okay? So head and shoulder can be so small, but it can be very aggressive, okay? Mostly I'll show you how to target with head and shoulders, but with triangles it's important to know how long it takes to build the pattern, okay? It took 53 minutes, okay? So we're just gonna write 53 minutes here. Why? Because this is the triangle and the other ones are head and shoulders, and I've just explained head and shoulders. This is gonna be 53. This is less than an hour, meaning we are targeting 50 pips or 50 points, but there is an exemption. Let's go back. I want to show you something important. I told you market condition can also tell you. With a pattern, you can also look at how big the pattern is. You use the first touches for that. This one is over 100, okay? You can read Richard W. Shabaka or McGee. You see, this is how they target. You can target 1 times this distance or 2 times this distance, okay? Mostly it's gonna go 1, but most of the time it's gonna go 2, okay? Yes, as I was saying, sorry, I just received a phone call. Okay, yes, you can take double the expansion of this, okay? Or you can take just one expansion of this. So already the pattern size tells you that it's over 100 pips. So yes, the pattern times tell you 50, but in this case you can target 100 pips. Why? Because the pattern itself is bigger than 100 pips, and mostly they will go this distance or even times 2 of this distance, okay? So it is important, okay? It is important. So now this actually overrules this 50 pip. We can target 100 in this case, or we can target times 2 this size, but to be in the safest side, just target 100, because again, trading is not about, it's not about the quantity, okay? It's about the quality. The quality, you need quality on your side. So we are targeting 100, not because of the time, okay? The time tells us information. The evidence candle itself tells us information, of which I will show you on the trade I took on Friday, because I said I targeted 200 pips, right? I will share that with you in a moment, okay? Because for the targets, we can use the evidence candle, we can use the size of the pattern, or we can use the time, okay? So now we're gonna go to the next criteria, okay? We're gonna go to the next criteria, but before we do that, let me show you how to target on head and shoulders, okay? Head and shoulders, guys, it's so simple. It's so simple. I'm gonna show you this. For head and shoulders, you just take this distance times 2, okay? Okay, you can take times 1, it's okay, which is gonna put you here, but mostly they can go times 2, which is the same principle we have just spoken about on the triangle. It applies on almost all the patterns. You can take times 1 for the safest, but mostly it goes times 2, okay? Mostly it goes times 2. So I will come to this. Or else, if you want to simplify that, you can use the Fibonacci tool, okay? So that you don't draw these lines and struggle. If you are using MT4 or MT5, you can use the Fibonacci tool. You can just target, okay? You can target from the wick, or else you can target from the bodies, okay? How do you set your Fibonacci tool to give you this? Okay, it's fine. Okay, I'll show you. Oh, sorry. I'll show you. Okay, you only come to your Fibonacci, and you can see the first level is 0 is to 0. 0 is to 0.0, okay? The second level is 0.5 to 50. You can pause this video and set this setting. You just come to Fib levels and punch in these numbers and delete the ones you have, okay? So this is 0 to 0. Yes, it's 0 to 0, 0.5 to 50, okay? And then you go to 1. After 0.5 you come to 1 on this side on the levels, and then on the description you put 100, okay? So this is one expansion, okay? And then you come and punch 2 this side and punch 200 the other side, and then you come and punch 3 this side and 300 this side. What it's gonna do is it's gonna measure the same distance from where you put it at the bottom to where you put it up here, and it's gonna give you an expansion. When it says 200, it means it's this size times 1, okay? It's this size. If you took the wick, it's gonna be like this, okay? So it's just giving you this size over here, okay? Or else if you want to take times 2, it shows you that this is your times 2. So if you are using your fib, if you want to take 2 times the size, you can just take it here. That is the fib that you are using. Okay, so it's the easiest way to actually measure this. Okay, it's the easiest way to measure this. Okay, so I showed you the targets. Okay, this is the head and shoulder. I took this one because this is the first point where they came and bounced before falling. Okay, so guys, you have this information, right? This is the information you have. I know some of you will say it's hindsight, but this is information you have. Okay, and it's the same thing every day. Watch my recent videos, it's the same thing every day. Okay, so even here you can do the same. You can use Fibonacci. Let's just come here. You can use Fibonacci. Okay, you can take the body, it's fine, but there's something we're gonna come to, because you can see sorry, I'm just trying to show you. Even here for the pattern size, you can take the you can take the Fibonacci, the same settings. Okay, you can take the Fibonacci and then pull it through. It's gonna give you the same thing. For instance, if you do like this, okay, it will give you the same kind of things. You see, it's gonna be the same kind of things. So now I believe with the targets, you know, many methods. I'm gonna share with you the third method where you use the evidence candle. Okay, but let me just finish here. Okay guys, this video is getting too long and that's not my plan. Okay, but let me just do this. Okay, fine. Okay, it's okay guys. Now we're gonna go to the last criteria, which is the most important one. Okay, do we have an evidence candle? What is an evidence candle? I just explained an evidence candle is the big candle that breaks out, mostly the biggest here. Okay, but it must stand out. Okay, it must just stand out. Sometimes guys, you'll need to make proper judgment, and that's why I say back test. It must stand out. When it breaks out, you must just see that this is the candle. This is the candle, because it will just stand out by itself. Just train your eyes to see this through seeing it more times. Okay, so let's come to the Dow. Do we have an evidence candle on the Dow? No. This head and shoulder failed. When does it fail? It fails the moment they go and break the other extreme. Okay, this is a failed head and shoulder. And again, the moment they break their shoulder, again, this tells you that it failed. Okay, but we take this one because sometimes they might be doing what? Sometimes they might be building a head and shoulder, maybe with two heads. Sometimes you can have a head and shoulder with 2 shoulders, okay, on one side. Okay, so that's why I'm saying it fails when they break the head. That means this has failed. So on this day, we take out what? We take out the S&P. S&P has failed. So what I'm gonna do is I'm gonna bring this one up here. Okay, so now we have 2 that at this point haven't yet failed, but now we need to assess them. Okay, do you have an evidence candle? Obviously, an evidence candle is the big candle that breaks out. Okay, usually from this touch here, you can see this one. This candle is almost the same as this one, but it's the most biggest from this move. Okay, so you need to make judgment, because sometimes prices won't give you things you need on a silver platter or perfect. You'll need to make judgment. Hence I say in my description, I've given you tools to backtest with. Go and backtest until you understand. Okay, so yes, we have an evidence candle here. If you look here, this breakout candle is the biggest candle from the head, but we take it from the shoulder. It's the biggest candle. It's an engulfing candle. It just engulfed 1 2 3. It engulfs all the candle from the last leg. Okay, so this is an evidence candle. Okay, so on S&P we didn't have an evidence candle. Why? Because it didn't break out. You see, this was a head and shoulder. We needed something that breaks out. I know some of you might have fell for this. I told you, wait for the candle to close, because most of the time they might give you a pin. So it's always important to do what? To wait for the candle to close, right? So we did not have the evidence here. Okay, it's very important. We did not have the evidence here. Okay, now we go to the last important decider. Okay, yes, we have evidence candles except on S&P. So S&P failed here. Okay, S&P failed here. What did we say? We said you cannot get to this point here unless this one has been met, this one has been met, and this one has been met. So you saw on S&P, they failed on this one, so we cannot go to the next step because they failed. But the two other ones, they haven't failed. They gave us the evidence candle. Now we are left with one criteria, which is what? The correct time. Okay, and I just explained the timings at which I'm willing to take here, or to take the execution here. Okay, so now let's go to the times. Okay, for me, I'm gonna use this because it's MT4. By the way, I use MT4 for analysis because that's what I'm used to, but for my executions I use MT5. Okay, so look at this candle here, look at the times down. This server is the broker is behind in 2 hours, so this is 14:21, but it's in reality it's 16:21. Look at the time, this is 21. When we, okay, let's first look at this one too. That is 21, you can note that down. And for this one, it's 14:09, that is 16:09. We are interested in the minutes here, not the hour. We are interested in the minutes. Remember, we are only coming during the US session. Okay, US session, which opens at 9:30 US time, 3:30 p.m. South African time. For you, you can convert that because different countries, different timings. Okay, so you see, this is where we got the evidence candle. One is 21, one is 09. So if we come back to the timings, that tells you something very crucial. It tells you that the first one, okay, on NAS it happened on 09, which is actually somewhere here. Okay, it's still within the timings. And the other one on the Dow happened somewhere on 21. You see, it's within my timings, so it happened at the correct time. Did it meet all the criteria? The answer is yes. The answer is yes, it met all the criteria. Now the only thing left is to execute. Stops, minimum 15 target, 25 maximum 25 pip target. It will be based on the time, the size of the pattern, or the volatility of the day, okay, or the volatility of the evidence candle. How big is the evidence candle? Okay, so look at this, guys. Everything has been met. The only thing we are left with is to come here. Okay, so we are gonna go to our charts. You see, you execute, and I told you after executing you wait a couple of minutes, just few minutes, guys. You can wait roughly 5, 10, just few minutes. You don't want to wait too long. You are waiting for what? In case they give you another opportunity. I already told you, when they retrace back into your entry, don't see that as a threat. That's an opportunity. Yes, sometimes they will close you and you'll be wrong. It's okay. They'll close you and continue or go to the other end. It's okay. Sometimes they'll just come and close you, stop hunt, and then retest. That's where you can take another entry. Okay, but we are using 25 pips so that if we are wrong, we don't want them digging 100 pips from our account. That's something we don't need. Okay, but mostly they might retest, not always. That's why I'm a breakout guy. Sometimes they just go straight, like if you look on this trade over here, they just went straight. Okay, if you were waiting for a retest, you were gonna miss this, and that's why I decided to be a breakout guy. I know that waiting for the retest is the safest way. Okay, if you want the safest way, wait for a retest, but you must know that there is a price to pay. You're not always gonna get everything on your side. Okay, there are things you are gonna miss, there are things you are gonna get. So you have to decide and know what you are willing to sacrifice. Because on this one over here, I'm almost done, guys. On this one over here, if you waited for the retest, you didn't get it. Okay, you didn't get it, and some days you won't even be able to get it. Okay, so guys, we are coming back. Okay, on this one they retested. And I love the retest because when they retest, they will give you another big engulfing candle, and that's what you need. So this was my A+ setup. Why? Because they are building a pattern on a level. I told you, if they build a pattern on a level, for me that's an A+. Okay, this is where I'm willing to take a bigger size, because you see they are building on the previous day's closing price, which is a free indicator in my description. Okay, and again, this is the high of the day. You can just search high of the day, yesterday's high and low indicator. Okay, and they engulfed the level again. This is a sign that this is a good trade, and already you are in two positions. You are in two positions at this time. Okay, yes, of course they build another pattern if you miss this one, and this one now is just a continuation. For a continuation pattern, mostly if the move has already been established, you don't need to wait long enough for all those big candles and stuff. You can take the breakout of that because the move is already in motion. They are just breathing a little bit by consolidating. Okay, so this move actually went 240, as you can see. It went 240. Okay, so I told you can target 100 or 200. Let's see if we use the Fibonacci for maybe, okay, with the Fibonacci, they came and touched the first expansion, and let's see, yes, you can see prices now. This is where prices are. So they hit both these expansions. In other words, you got 200 and something pips. Okay, I just showed you how to take these targets. Okay, so when we come to this one, this is an evidence candle happening at the right time, and you take this trade. You wait a couple of minutes, guys, 5 to 10 or 7 minutes for a retest. You see, they came and retested. They broke out, went down. The next candle, they did what? They actually retested, and that's where they went down. And if you put from the first entry, you put roughly 25 pips. This is where 25 pips were. So your stops are so far. Hence I say I recommend 25 pips, even though I said minimum 15. Okay, I recommend 25 pips. You see, this thing goes to, yes, they didn't reach 25, and when you take a second entry, that's when you can trail the first entries to the 25 to 25 over the second one. But this time around we had a lower high. So when you have a lower high, you can just bring your stops to the lower high. Why? Because if they come and close you, that means you are wrong. Mostly they are not going to come because there are people who bought here. There are people whose orders have been filled on this line here. And if they come, they might release them a breakout, and these guys might exit with minimum losses. So guys, again, if you used an expansion, it doesn't matter this what you took. That means this trade gave you roughly 83, the first entry, and the second entry gave you 79, roughly 80. Or even if you took the low they made on the day, still they paid you. Okay, roughly 100 pips or 90 something pips. You see, same thing every day. We follow the same criterias. Okay, we follow the same criterias. And now let me just share something crucial with you. Okay, I told you we wait for the pattern. Just try to sit on your hands until you have a good pattern, guys. Please try to sit on your hands until you have a good pattern. You see, they went up. I didn't chase candles. I always wait until I know what I have. You see, this pattern is not the most perfect in terms of perfect pattern. That's why I say sometimes you'll need to make good judgment. But even if you doubt, I repeat this, even if you doubt the pattern, the evidence candle will stand out in a way that takes away the doubts. You see, this 1 they go up again, 2 down, they go up with this one almost a touch, 3, okay, and then 4 up. Okay, but at the end of the day, guys, at the end of the day, you must make judgment on the patterns, because you can see they touch with pins. Sometimes they're not going to touch. In reality, these are supposed to be areas, but we use lines for simplicity. But that shouldn't confuse you, because when they give you the evidence candle, it must just stick out. Even if you're doubting to take it, it must stand out in a way that it takes all your doubts away. The evidence candle must stand out. If it doesn't stand out, don't take it. If you have to guess if this is a breakout or what, don't you dare take it, because that's not an evidence candle. The reason that you are guessing simply tells you it's not an evidence candle. For instance, if you were taking this pattern here, okay, if you are taking this pattern, this is an evidence candle, but this was Friday. Usually Fridays are unidirectional. I just opted for to close this because I had to go out, and I don't want the market to close on me, because Monday might open with a gap. Okay, but I had initially targeted 50 pips. You can just go to your charts on Friday. They came, I told you, most of the time they retest the entry to scare you out, mostly if they are planning big moves. And that's why we don't trail our stops, because most of the time we know they will come to the entry. You don't want a point whereby you targeted 100, they go 70, and then they come to retest your entry, and then they go to your 100, and you have been taken out at break even simply because you were so obsessed with taking a risk-free trade. It's not a risk-free trade, because if you have 70% pips, winning 70 pips, those pips are yours. Okay, The fact that they come and close you at 0 doesn't mean you will close that break even. Okay, you lost. So I don't really love trailing my stops, because most of the time I felt a lot of pain. They will usually come to your stop, to your entry, not to your stops, because there are many people trapped down, but to your entry they are gonna come most of the time. On Friday they came just to here. Okay, and again, it's important, just take your trade, put in everything, wait for a retest. If you don't get a retest, just close your charts. You can come back tomorrow, you can come back after 3 hours, after an hour, it's okay, because you have your take profit, you have your stop losses. You don't want to disturb your trade where maybe they go in your direction, they come close to your entry, and now you close your trade and break even, just to find that at the end of the day they were just coming to test, or to kick you out, or to scare you out, because that's what they do most of the time. So guys, if you see, this evidence candle was above 50 pips. Okay, it was 47 pips, actually almost 50. What I do in that case, I know I don't enter immediately on the close if the candle is too big. Okay, what I do is I wait for the next candle, because most likely if they give you a big candle like this, the next candle will start by going down. That's what most candles do. They start by going down before they go up. That's why a candle has a wick down and a wick up, and the body. This tells you that where the body closed down, like if it's a green, if it's a white candle like this candle opened here, went down before coming up, it went all the way up and came and closed here. Okay, so usually when they give you such a big candle here, it is gonna start by going down. So even if you enter and put 25 pips, because this candle is too big, they might retrace 30 pips. Okay, that's where sometimes you find we have a big candle and then the next one is a doji. Okay, why? Because they can come down and wipe everybody. They know this is a big candle. Most people are jumping onto the trade because people are chasing candles, right? So they will start mostly by going down. So what I did here, if you look at the entry, I didn't execute it immediately. I waited for it to go down and then come up again. The moment it surpassed the closing here of the recent candle, that's why I entered. They had already done their job down, so I entered here and I targeted 200 pips. They came 100 pips, but when I came I saw they've given a reversal pattern, so I just closed, and beside I was going out. Okay, I closed it at 80 something pips, which is something good on a Friday. 80 pips is something very, very good. Okay, so I've showed you most of my trade for last week, and last week was so perfect, guys. Most of the time it's perfect. Yes, there are days when you will lose, hence you have to use proper risk management. But so now I believe you understand. If the candle is too big, wait for the next candle. Sometimes it might start by going down and then come all the way back up, and that's your opportunity. So guys, I really appreciate you. Have a blessed day. Today look for the same entry. Somebody will say, but this is hindsight. What is hindsight about this? You just wait. I told you to identify patterns, find a point where they are touching multiple times. They come down, and then they come. Okay, maybe you drew your line here, they come. When this candle closes, you have to ask yourself, is this an evidence candle or not? You see this candle, if your line is on the, unfortunately this is an image, if your line are just up below this wicks here, this tells you this is not an evidence candle. Okay, it's not an evidence candle. If you have to like ask yourself, guess, think too much, that's not an evidence candle. Okay, an evidence candle must stand out. Okay, even if it's not that big like this, but it must stand out that this is a breakout. Okay, so that even if they want to retest, they give you a nice retest and continue in your direction. Okay, so guys, I really appreciate you. I really appreciate you. Have a blessed day. Thank you, guys.